Hey guys, welcome back to the Ice Project. Thanks for tuning in. First of all, if you're watching us on YouTube, please subscribe. Today we're going to be talking about accounting. It's a subject that's not too sexy to talk about, but it's very, very important if you're a business owner. But for now, roll the intro. Welcome to the Ice Project. Welcome to the Ice Project. Danny, what's up?
Mate, living the dream.
How was the New Year's, all that?
Yeah, good. Yeah, 2 kids, didn't do too much, mate. Just tried to stay alive for 2 weeks and not be bored.
So you've obviously been on my podcast before for something a little bit different, but today we're going to be talking about accounting. But first of all, I just want to thank you for coming into my life and YKTR's life. If you listen to my podcast, you probably know the ads that I run through this podcast, and it's through this guy, Danny, and he's sort of been a blessing for me and our business, and sort of look up to him as sort of like an entrepreneurial big brother. So thanks for that.
Cute, mate. Appreciate it.
You like that?
It's been the same both ways. Like, I learned a lot from you as well, mate.
Thanks,
so it's been really good.
I appreciate that. Okay, accounting. Why is accounting not cool to talk about?
People don't like talking about money, I think, mate. And, the compliance side of accounting, which we just touched on then, like BASs and tax returns and stuff like that, it just gets overwhelming for people. So they'd rather slide it under the rug than actually get up and deal with it. I think that's my view.
Why are we scared to talk about money?
It's a hard one. Like I think we touched on this before. Like, you'll talk to your mates about sex, religion, politics, etc. now, but you still won't tell them how much money YKTR's making or not making, or you're making personally, kind of thing. People are scared to. I think it's a scoreboard, and you're scared to admit where you're up to on that scoreboard. I'm not sure. And
it's sort of scary to talk about how much money people taxes and that take off you, eh? And I feel like it's a subject that we sort of ignored. But just a bit of context on me and Danny, we sort of, YKTR started. A lot of people see me and see YKTR as a success and see me as a really good business person, but I'm actually only kind of good at a couple of things, which is probably marketing and branding. It sounds about right.
Nail those though.
Yeah, really good at those. But around the whole business of, there's 3 parts of a business that you should focus on: marketing, branding, operations, and the last part is finance and accounting. And YKTR, for example, like 2 years ago, we weren't in a pretty good place, were we?
No, it was all sales, which is exactly what you just said. You nail sales, and to be fair, you've done a really good job on building out the operational side of things too. Like, you were getting your stock from China, you were going to China. Like, that's not easy. There's a bit of trial and error in that, and you've kind of punched through that pretty well. But yeah, like most people, you were kind of don't worry about the numbers. It'll sort itself out. We get the sales done, and to again, that's true to a degree. Jakey from G'd Up hit me up last night. He's like, "Can you sort this stuff out for me?" He's like, all I'm good at is sales. So the exact same thing. And my answer back to him was like, mate, if you don't have sales, I can't do anything for you. So you just keep nailing sales and we'll deal with the rest.
My man. All right. So we've got a few topics that we're going to touch on. First of all, structure. What is structure?
So structure. So when we talk about structure in business, we talk about 2 different things. So one is structure of the business flow, like how you're going to operate your business. The other structure is structure of entity setup. So, are we going to run as a company or a sole trader? That kind of piece.
When should you go from a sole trader? Explain a sole trader first, and when should you transfer from a sole trader to a company?
Okay, so there's essentially, I'm going to explain 3 different structures. I'm not going to go into trust because it'll just get it confusing. So there's essentially sole trader, which is you wake up and you go online and register an ABN. You become personally like the business. So anything that happens in the business happens in your name as an individual. The reason why that's an issue is from a risk perspective. If something goes wrong, you're personally liable. And then from a tax perspective, whatever money you make, you're paying tax on your marginal rate. So one of the footy boys that are on a 300 grand a year contract somewhere, then go start their t-shirt brand on the side and make 50 grand, they're paying tax on 50% on that 50 grand. So it doesn't really make sense tax-wise. Something goes to shit, they lose the house over it as well. So that's sole trader. Partnership's exactly the same, except you're doing it with another person. When I say exactly the same, very similar, but doing it with another person. And then the problem with that is if you go broke or something goes wrong there and the other person can't afford to pay his half of whatever the issue is, you're liable for the whole thing. So you can't just go, no, I'm paying half, leave me alone. So
it was 50-50. It was 50-50.
And like everyone goes into things going, that won't happen to me. We're good mates, et cetera, et cetera. But when fucking...
Let's go to business with my friends. That's a mad idea.
Shit hits the fans, things fall apart. Then company is essentially a separate entity. So it's not you guys anymore. It's another business. Like, think of it as another person. Anything that happens inside that business is that business's problem, provided you're not doing anything illegal and that kind of thing. It's that business's problem. And it pays its own tax as if it's a separate business as well. So back to your question, when does it make sense to move from one to the other? Like ideally you'd be in a company or trust structure from day one. The thing that stops people from doing that is generally cost.
How much does it cost to set up a company? I know, but I'm just asking the question.
A straight company with nothing else is $1,000, like $1,100. You can do it yourself online probably for $600. Someone will charge you $2,000. So call it between $600 and $2,000 depending where you go. But
so I want to ask you a question. So the average Joe, he's working a normal job, gets paid $65,000 a year, goes, I want to start a t-shirt brand. Do they stay as a sole trader or try and set that up straight away? Or would you reckon they should spend their $1,000 on something like on inventory, on sampling, on stuff like that, or just set it up straight away?
Yeah, it's very hard. So if you're being realistic and talking dollars and going, what's the probability of them actually succeeding and stuff like that? Realistically, the way the business world works, 95% of businesses fail or people stop operating. So it does kind of make sense for them to be a sole trader day one, just practically. But as soon as it looks like it's going to be a business, like that might be 2 months in, it's like, hey, fuck, we're getting some leverage here, let's go. Or you start trading, like something looks like there's some risk in it, you'd move to a company as soon as possible.
So you sort of talk about 95% of businesses fail. I read another stat that of those 95% that fail, it takes the average business over 7 years to earn over $1 million, which is pretty crazy, eh?
Yeah, it's crazy, mate. And like, I deal with a lot of different business owners, and I carry that stress that they're all carrying. Like, it's scary how hard it is to actually get a business to a point that it's like, yeah, I can feed my family and I can quit my job. It's not like some of us get lucky and there's some luck along the way, but it is actually fucking hard work. I was with the client on Thursday, and we'll just talk. He's very successful now. Like, we're at the back end of the career, and he's got some people like trying to take advantage, and like telling him how he's lucky and all that. And we're just going through his journey, and like he started in 2003. So I was like, fuck, 17 years to get to a point where it's like, yeah, you know what, I'm comfortable. And he's like, he was working 3 jobs for the first 10 years. So
it's crazy.
Yeah.
And a lot of people think like once they start a business and they see these sort of numbers and like, oh, business turn over $500,000 a year, or just say $100,000 a year. And like you're leaving a job that's paying you 70, 80K. Like there's a difference in it, isn't it?
Mate. And the business, as you know, the profit on that $100,000, there's not much there.
Fucking oath, there's not.
Takes a while, and it's actually hard to get the $100,000 of sales too. Like if you're starting a t-shirt brand from scratch and you haven't got a single customer, to sell $100,000 of t-shirts, like it's fucking not easy.
Scary too.
Yeah.
Do you want to roll into the structure?
Yeah, let's talk about it.
Lukey, can you get that up on the... if you're listening to this via podcast, I encourage you to jump on YouTube. We're going to put up how YKTR is set up as our company structure, so you guys can see it. A lot of it's changed a little bit, but do you want to talk from a video standpoint, but also communicate via like podcasts?
I'll do my best. Yeah, I'll do my best. All right, so let's start with...
Sorry. Some of this has changed as well, because we still got Tech Project. We still own the IP for that, but that's sort of changed to YKTR Media or Sports, or we're changing names around here a lot.
Let's call Tech Project Media for the purpose of this. Let's start with where we started. So we started with YKTR Proprietary Limited, essentially. When you first came to me, you had already gone past being a sole trader and you'd set up your company. It was YKTR Proprietary Limited, owned by you 3 guys individually. What became apparent really quickly was you guys are going to be doing a whole bunch of other stuff, firstly, and that's where Tech Project was coming about, and media and everything else. And there's other businesses you've spoken about getting into, firstly. And secondly, with everyone's other things that are going on in their life, like the boys were still playing footy and stuff like that. It's like, fuck, doesn't make sense for us to pay out money to these guys because they're going to get hammered in tax.
So just to roll off the back of that, when we launched YKTR, we set up as a company properly. Me, Chiha, and Corey had a meeting together. We divided the company of what we thought was fair, and a lot of it was based off money as well. So people will see me now go, oh, you feel like you deserve more? Nah, I've made my bed. I'm going to lie on it. This is what I negotiated at the time, and this is what we're going to stick with. So that was really important for us at the start. But then, sorry, keep going.
And that's a common conversation, mate. It's easy to look at the end result and go, oh, yeah, cool, we're successful now.
Who gets what?
I should get more now, fuck, you put money in at the start in different, like some people are investors, some people are working in the business. You get a salary for the time that you work. Why should you get more of the business? You're getting paid for that.
And you made a good point there just before. So sort of rolling off the back of that, Chiha and Corey, even though they own just under a third of the business, so I own 40% of YKTR, they own 30-30. I get paid a salary because I actually work in it, but they haven't made a single dollar.
Yeah.
They have not made $1 single out of YKTR. They've sort of trusted me to do all the stuff, and we've got staff now that we have to pay. But like you said, there's no point in them earning, getting money out of the business because they get taxed the fuck out of it.
Yeah, correct. And one day, I'd imagine the dream is that we build something worth some fucking money and they get a share. Like, we're playing long game here. We're not playing, oh, can I get $10 today to buy a fucking coffee? All right, cool. So we start with YKTR Proprietary Limited. What we kind of spoke through with you guys was, all right, firstly, we're going to launch Tech Project. How are we going to differentiate between YK, and you guys wanted to own that in a different percentage to what you owned Thingo. So we had to break that out into its own business. So we started a second company, YKTR, Tech Project.
Yep.
Yeah. So we started Tech Project as a second entity, which is now YKTR Media.
So what we did with that was actually we had another meeting. Hey boys, like this is what we want to do. If you want to own this amount, you have to put this amount of money in, and that's essentially how we done it. And yeah, we've done it. It didn't work as well as we'd like, but we still got it there. But
yeah, but that was the decision. Firstly, then we're like, all right, cool. How are we going to separate all the reporting, the costs, the different ownership percentages, etc. So we said, well, we need a second business unit for that to be able to track that business properly. And then we're going, all right, I see if something happens with Tech Project or YKTR and you have to shut those down or rebrand it or move all the stock or something, like all the risk sits inside those entities. You own the IP in those entities. There's no separation between the trading business, being YKTR or Tech Project, and where your assets sit, being inventory or IP or etc. So then we're like, all right, let's break this up. We're restructuring anyway. Let's break this up a little bit so we can get a little bit better protection. So the businesses are separate businesses and not everything rolled in one. So if something goes wrong in one thing, we lose everything. Yeah.
So that's an important point to understand. So what he's basically saying is like we had everything tied up into fucking one or two companies, and someone sues us, someone copyright, whatever, blah, blah, blah. Boom, if they take it down, the whole thing goes down with it, doesn't it?
Yeah, that's it. And like you might win that court case, but you have to fight it or you have to go through a process. I think I gave you the example. We used to run a retail store at Westfield Parramatta. I told you that, yeah?
Yeah.
And it didn't go amazingly. It actually went pretty bad. And 2 years into a 5-year lease, when we set it up so the person that signed the guarantee didn't have much assets. So we had some leverage there with Westfield. So he signed a guarantee. If everything went to shit, he was personally liable. We got 2 years in. We're like, fuck, we're never going to make money here. We just packed up and left. And Westfield were like, well, hang on, wait, we're going to go after you guys, personal guarantee signed. And we're like, good luck. See how you go. But point is, there was nothing in that company that they could get. So with everything else we had in other places. So there's that piece. Then we're going, all right, let's get YKTR logistics set up. So that's where we're going to hold all our head office operational costs, all our stock, all our everything. So then as YKTR online and Tech Project make sales or do stuff, we can charge them across costs.
So this one's up here, that's our online store, yeah?
Yeah, that's our online store, yeah.
Yep.
We can charge across costs to logistics to keep that business running and hold all the stock and stuff in logistics. So if we did shut down YKTR Proprietary Limited, we just shut it down. We still own all our stock. No one can touch that.
Because in theory, we're just only licensing the IP off the IP company, aren't we?
Correct. So, and that's where we're going to go now. Then we have a unit trust, which owns our IP. So let's call it a company for the sake of keeping it easy. But yeah, where you've got YKTR, Doozy, Tech Project.
Those are all trademarked too. You can't use those, people.
That's it. You trademark Doozy. That's good.
Yeah.
Awesome. That's YKTR IP. So basically that owns where our real asset is.
That's where the money is,
That's where
isn't
the
it?
money is.
Yeah.
We're going to sell. We're selling from there.
What's that, bro?
Is that intellectual property?
Yeah. IP is intellectual property.
Okay, yeah.
Sorry.
Trademark, IP with all that.
Good call. But even like domain names, things like that, like we hold that all in one place. So if we ever want to sell, like we can sell these entities for nothing or shut them down. The real value's up here. No one can ever touch that. Doesn't do anything. Just gives an IP fee down to the trading businesses. That makes sense?
Yep.
And then, scrolling up from there, we've got ownership. Rather than you two or you three individually owning it in your personal names, we've now set up family trusts for each of you to own your shares in the business. Does two things. One is protection. So if fucking Corey goes on the bender and gets in trouble,
that's a chance of happening too.
Zero chance. He doesn't own anything personally, so they can't come and say, "Hey, Corey, you've got this asset in YKTR worth
30%
$1 million.
of YKTR.
Give us that." He's like, "I've got nothing. My trust owns it. Don't talk to me." So it gives him a little bit of protection there. And then from a tax perspective, when we do get to the point where we're paying out profits, the way a family trust works is Corey doesn't necessarily pay the tax on the money that comes out. He can, it goes to his trust, and he can, from his trust, go, who in my family, based on what my trust says, do I want to pay do I want to give this money to pay the tax on it kind of thing? And they declare it in their tax return. So he might have a missus not working that can essentially
Gives you
get
80K,
that.
yeah,
Correct. So that flow through of tax makes a big difference for guys who are earning high income to start with.
Corey for girlfriend, huh?
Yeah, no, fuck. Well, hey, Seguiara got one, so
Yeah, hey, there's still hope for Normie there.
Got married, still hope. So yeah, I guess and we got to this point after the business was
Making
operating.
money,
When we knew that there was a business there, like we wouldn't come in day one and go, hey, let's get the most complicated fuck off structure that we can get. It'd be, all right, let's start either as a sole trader or a company and let's, see where we're moving and then let's start to build out from there.
Yeah. So what's the structure like? Obviously, I know the price, but
Yeah.
what was this cost to get set up?
Excluding the 3 individual family trusts, we're probably looking at somewhere around $8,000 to get all of that set up, which isn't cheap. But it's, again, for the sake of protection and making sure, like, we're saving more than that in tax on one tax return once we start to flow this through.
Yep.
So getting it right's important at the right time.
So YKTR Logistics, do you want to explain that like a little bit better for everyone?
Yeah, cool. So YKTR Logistics now does all our stock importing. One of the important things actually about that was, this is going to get a little bit fucking compliance world, but you have to lodge, you pay GST when you import your t-shirts. So you might import $100,000 of t-shirts just to make up a number. You'll have to pay $10,000 of GST when that comes through customs. You can register for something called deferred GST. So
We've got that, yeah.
which you have. So, and in order to do that, you have to do monthly BASs, which is a compliance headache, if that makes sense. Part of YKTR Logistics was that's the only one we need to register monthly to then not have to pay that $10,000 when we order and import in products. So it gave us that purpose. It also holds all our stock. So like YKTR Logistics is actually the owner of the inventory for YKTR, for Tech Project, for any other business that you get involved in. That's where the stock's held. Then when we make those sales in those other entities, we essentially first sell it from YKTR Logistics to YKTR online, and then online then sells it to the customer. So there's a bit of a kind of admin process that happens in the background, but it means that no one can ever touch your inventory. It all sits there.
Yep.
I know what else happens there. Like we pay our rent from there, we pay our wages
rent, pay our
there.
wages. So what basically it works is, say we run a collection and all the money comes into our online store there. YKTR Logistics then sends a
Admin, like it's an invoice every month.
Invoice every month or every fortnight saying, oh, you're selling our stuff, so you owe us this, and then you sort of pay out from there. And it sounds a little bit confusing and complex. And once you get into like a little bit of rhythm, it just, like, you've explained it pretty well. It just makes sense.
It makes sense, yeah. And like the other part is once we have more, like we had Tech Project, say we've got ICE employed, and he's working across 4 brands. I'm not going to go do his payroll 4 times, once in each company. Now we can just do it once and charge it by 4 across to those entities as part of a monthly fee. So just as we're growing and adding on brands, it's letting us, it makes the admin actually easier, not harder.
Yep. Yeah. And another one is like I started just selling like the Ice Project t-shirts, sort of dreamers and sort of the licensing fee, because in theory I was using our systems, and even though like I own the business, I still had to pay a certain amount, and I could agree on that sort of type of stuff. Do you want to explain that? Yeah,
it's exactly the same thing. So Ice personally is now selling some t-shirts and stuff like that out of his own kind of endeavors outside of YKTR. He then still can contribute to a bit of the rent and can contribute to a bit of the staff overhead or the IT setups and that kind of stuff through an invoice to, it's an agreed rate to YKTR Logistics. So just keeps all our costs centralized. Makes sense?
Yeah, it makes sense. Hopefully that's... I encourage you to jump on YouTube and watch it if you want to get into a more of a...
Visual,
because it's kind of... It shouldn't be confusing. Nah, it's definitely easy to see, isn't it? Here's a question. How do you trademark something? That's a common question.
For me, when I had to trademark stuff, I went to lawyers. So I don't trust myself with the... I work in professional services, so I understand a bit better the level of expertise you get when you pay for something versus do it yourself and the time it takes.
What does trademarking cost?
Probably somewhere...
Say one country.
One country, probably around $1,500, depending on how many uses you have. Like I think you would have did you just do clothing as a use?
Yep. Just clothing, yeah.
So you would have one class, I think they call it. Whereas with Little Homie, I think we registered like 5 classes. So it was like clothing and books and yada yada. But so I think $1,500, give or take, per class, per country is what a lawyer would charge, which isn't cheap.
So here's a bit of a few lessons for a lot of people that listen to my podcast, are people that are trying to start businesses. So the common question is, what company structure should I go into? Should I trademark my stuff? What's that? Like, that's like $3,000 that you're going to have to fork out straight away. And people are scared about the trademark stuff straight away, but no one's going to steal something that's
not worth anything.
Yeah, because people fall in love with the ideas or the name of the brand. They're like, oh, someone's going to steal my idea.
Yeah.
Like, no one's going to steal your idea.
Mate, Apple sell computers and fucking Google's a search engine. Like, the name's actually irrelevant until you've built
something behind it. Yeah.
And then my understanding of how trademark works in most countries is a first use basis. So I think Australia and the US and that are like that. So if you're selling doozy t-shirts today and someone else starts bringing them out, even before you have the trademark, you still have a legal case. It's obviously harder without the trademark, but you still potentially have that legal case there.
And it's not something you just jump online and go, oh, I'm just going to buy a trademark now. It takes about 6 months, for it to register.
It's been 18 months on the Little Homie one.
Yeah.
It's taken ages.
Yeah. So, like, you sort of register and it has to go through the screening process, and then you eventually get this email. Actually, one thing, watch out for scams off the back of trademarks, because they'll only email you, but if they ever send you a letter, don't pay it, because I almost fell for that. They're like, oh, we're going to take away your trademark. You got to pay €2,000 to this random space in Germany. So watch out for the scams as well.
And because there's a live, they advertise, hey, this new trademark's here. So people jump on that and try and scam you.
Yeah, smart by scammers. All right, next topic. Profit and loss, P&Ls.
All right, yeah, let's try and, again, we don't have visuals for this, so let's try and talk it through in a way that makes sense for people. But basically, we get into business, and most people have a couple vanity numbers that they talk about when they talk about business. So
top line
revenue. So first thing is like, fuck, I made, we said before, 100 grand of t-shirt sales or 100 grand of book sales. Let's talk about books, so it's a bit easier. 100 grand of book sales doesn't go to very much in terms of actual profit, like money I get to keep out of that.
Can you explain the difference between top line and bottom line?
Yeah, cool. So we start with our revenue, which is our sales number. So we sell 100 grand of books. That's our, I guess, top line revenue number that we all talk about from a vanity perspective, but it means nothing.
It actually does.
Then we have our direct costs, which are the costs that essentially takes us to deliver that product and make that product and deliver it to the customer. So in our e-commerce land, we've got our cost of making the book and getting it to Australia. We've got our cost of shipping that book to the customer, and we've got like our merchant fees. So how much you pay PayPal and all of that kind of stuff. So generally we're aiming for somewhere around like, and this isn't real numbers, but just say we're aiming between 40 and 60% in our retail environment to land at that gross profit line, which means when we go online and we go, yeah, cool, I made 100 grand of sales. Let's use 50% to make it easy. I made 100 grand of sales. 50% of that money straight away has already gone to fulfillment, to merchant fees, to product cost. Yeah, well, not even marketing, even before that. Just the actual cost to make the product, the actual cost to Australia Post to send it to the customer, and the actual cost of PayPal and everything else. Like 50%'s gone. So of our 100 grand, we've only got 50 grand left. Before we do anything. Then we've got our ISA's wage to run the business, or our marketing costs, or our rent, or our everything else. So then you've got all your other overhead costs that you incur regardless of whether you make a sale or not. I've got to pay that rent. So there's our costs that directly relate to making a sale, and then there's our costs that I have to pay fucking whether we make one sale or 0 sales or 1,000 sales kind of thing. So top line is revenue. Then we've got our gross profit line, which is our revenue less all those direct costs, like the merchant fee, the shipping cost, the product cost. Then we've got our net profit, which is what we've got left over after paying the rent and everything else. And
then you get taxed on that.
And then you get taxed on that. If there's a profit, then you get taxed on that.
Yeah. So say after that 100K, after all that sort of stuff, you clear 30, which would really
at that level would be good. If you can aim for 20 to 30% profit when you're fucking starting out, you're killing it.
Yeah.
But say you left.
Doesn't the average business only operate get about 10% profit? Does that sound
everything's different, man. Every industry is different. Like we've got call them trucking businesses that we work with, like distribution, that make like 4% profit, or petrol stations that make 4% profit, but they do huge volume. And then we've got services businesses and stuff like that, which will make between 30-40% kind of profit. Then we've got e-com businesses, which generally we're aiming for that 20 to 30% kind of profit, but we need volume to get there.
So say after that 100K of your books that you sold and you clear 20, you clear after 20,000, you're gonna have to pay what, 28.5 on that?
Yeah, call it 30%. Say 30%. So you call it 30 grand, we pay 9 grand tax. So, but that's again, most people at that level aren't making that money. We're eating it all up in marketing costs or in people costs or in rent costs. We really need to scale that sales number before we can actually make money.
Start dipping into it.
And then let's go a bit deeper in what we've kind of learned with you going through your journey is the game really is played in that gross profit level. So the overhead costs, you negotiate your rent and you negotiate your wages, and you can get in and out of leases and that kind of stuff. Like, we can manage those numbers a little bit. They're pretty fixed, but we can manage them. The direct costs is where the business is made or lost. So you say, like, you're setting your sales number, you're setting your t-shirt price, we're setting our book price. The costs that are associated with getting that to the customer, that being as low as possible, is where people make or break their businesses. So the journey we took with you was, we had a huge direct cost issue because you didn't have the data. So you're overspending, or you're undercharging for your t-shirts because you don't realize how much they're costing to make. You're flying them into Australia rather than putting them on boats. And you're running sales without realizing the impact of sales on those gross profit. No data, weren't able to actually make proper decisions on those numbers.
And so the way we priced our products back in the day is like, we sort of looked around and go, oh, we sit about this place in the market compared to like Zane Road, compared to, it's like, oh, we might be just a little bit less than them. So we just price our stuff like that, where it should be based off like how much you actually cost. And we're still we're nowhere near perfect right now. So we fly all our stuff in. We're wasting a lot of money there.
Yep.
If you've noticed, our brand, we've started to increase price, not only because we've increased quality, because we've increased quality, the cost of it's gone up. So we just have to move with it. And a lot of people come at us going like, oh, why are you, like, who do you think you are? I was like, no, this is for survival. This is for fucking paying rent, fucking everything.
Yeah. And I saw you made some comments on that when you brought out the shoes.
Yeah.
Huge fucking, I saw your point around economies of scale. Which is exactly right. You're comparing to Zane Robe, who are probably you're making 50 of a design. I'm making up numbers. You're making up 50 of a design, and they're doing 50,000 of a design because they've got that many outlets for it.
What economies of scale is, if you understand it, is so the more you make, the cheaper you can get it at cost. So if we make 100 t-shirts, they charge us for this, but if we make 10,000, then probably give us a better rate, which they obviously would. Yeah. So the thing with things like Nike, and the reason why smaller businesses have to do it is because they've got their own factories. They can make things at for cost wise as cheap as they want, and they charge. So that's why, and people get caught up in brands so much. So Nike, Adidas, because they've been around forever, they've been $1 million marketing campaigns to position your thinking in that sort of line of, like, you think it's worth more, but it's actually not.
Same, probably coming from a very similar factory to the one you're making your shoes in. There's a bit more, I guess, experience in that. They've learned a lot. But they could do...
A Gucci t-shirt doesn't fucking cost $300 to make. It's cheaper than ours.
So when we talk about setting price, we generally play on 3 different factors. One is, what are your competitors doing? So, cool, suss out your competitors. 2 is, what's your costs? So what are your inputs into making that product? You need to be able to make sure you can make money on the back of it. And 3 is brand. Like, where does your brand sit? How do you have a brand that people give a fuck about to actually spend money on what you're doing? That makes sense? So wrapping that up, or coming back to that, the journey of understanding your direct costs and how they impact your sales. So we'll talk about fulfillment separately. Like, you didn't actually think about or understand how much it's costing you to fulfill each order. So we see what other websites are doing. They're like $50, orders over $50 or $100 of free shipping, and we're like, fuck, we have to do that too. And you pretty much have to in today's environment.
Yeah, everyone expects it too.
Everyone expects it, which is fine. Amazon have kind of pushed that world onto us, and again, they've got economies of scale that they can afford to do that. But point is, you need to understand what that cost is. So when you're making those decisions, you're like, all right, cool, am I actually making money when I sell this t-shirt, or am I losing money? A lot of businesses... And again, you guys were in a similar boat where we're making all these sales, but even just after our direct expenses, we were making very little to no money to actually pay all our overheads and everything else. And we're getting to the point like, oh, we need to reorder more stock from China. It's like, fuck, where's the money going to come from?
Where's the money?
Where's the dollars? So really important, like, if we can stress anything, it's getting to the direct cost that it takes to make and deliver your product. Don't just look at sales. Sales are fucking irrelevant. It's just vanity. Really get into those numbers.
Do you want to touch on is that all for P&L for now?
Do you want to touch on marketing quickly around
it? Marketing metrics, let's go.
Yeah, cool. All right, so once we get to that, I guess, number of gross profit, then we start to look at, and this is what we've done with you guys, then we start to look at them, all right, how much does it cost? So say, every time someone makes an order, the average order cost is $100. So that's a crucial metric for most businesses is, what's the average cost each time a customer comes to me? If I'm a coffee shop, like, is the average order $10, or are they just coming to buy a coffee for $4?
And the reason why average order value is so important, you understand this now when you go into a business, when you go to a petrol station, it's like, do you want to buy a chocolate?
Yeah.
Or you go through Macca's, like, or the upsell, that's important because what they're trying to do is average it, like, up
increase
the
average order value. Yeah. And it like...
Macca's, do you want fries with that?
Do you want fries with that? And it's famous for it. So it's actually very difficult to get people to come to your business to buy something. The idea is that when they're there, you get them to buy as much as possible.
Once their wallet's open, you should get a bit more.
It's easier to get it once it's open. And it has to be genuine. Like, you're not trying to fucking tell them every single thing that happens. It's just trying to subtly make something genuine, across to get that average order value bigger. But it costs money to get them there. So we want that average order value as big as possible. We also care about the lifetime value of a customer.
Explain that.
Yeah. So can we use YKTR?
Yeah.
So YKTR, someone comes in and they come the first time and they might buy one t-shirt. And it cost us $40 in Facebook spend to get them there to buy that one t-shirt. And that t-shirt we only make $5 on. So essentially we're out of pocket $35 by the time they come through and buy that first shirt. What's really important is that we've built a brand and a community around YKTR that gets that person to come back again when we launch the next collection, to come buy another t-shirt or another t-shirt and pair of shorts that we don't have to pay Mark Zuckerberg through Facebook for them to come back again. We can just run an email out to them or a text message and get them to come back and re-engage with our brand again.
And then say next time they spend $150, that's $200 of lifetime value of that customer off that $40 was spent to get them.
Correct.
And you just roll up and up and up. And that's sort of the importance of sort of brand experience and customer journey, isn't it?
Yeah, that's it. And that's where Amazon solved this problem really well, in that they know that, like, Jeff Bezos has a saying that your gross profit margin is my opportunity. So he knows that he doesn't need to make that much margin on products because he's got people coming back. He's created such a good experience in America, at least.
Speed.
Yeah, speed. It is. It's like one click to buy anything, and they've got everything that you want.
Deliver in like 4 hours and stuff now.
And free returns and everything else. So they've set this customer experience up that they don't need to make much money because they know you're going to spend thousands and thousands of dollars with them over your lifetime with Amazon. So Nike's a very similar thing. Like, you spoke about Nike's brand before. Fuck, how many pairs of Nike shoes do you have and shirts? And like, you buy from them 5, 10, 20 times a year, you go buy something Nike. If people did that with YKTR, you wouldn't fucking need to spend on marketing anymore. But point is, like, we spend money to get people to engage with the brand initially. It's how do we get them to stay being part of that community and that brand for
I think rolling off the back of that, a great way for that is your returns. That's a big one for us. And I heard Gary Vee talk about it one time where someone ran a sale and like a sale in the wine, and the guy come back 2 days later, he goes, oh, this wasn't on sale, but it's on sale now. And it was only like $2-3, and people get petty with that type of money, like shipping and stuff like that. But if you give them that good customer experience and return it and exchange, and like, you might make that loss up front, but you talk about lifetime value of a customer, it's a lot more important. And we sort of had to deal with that at the start because a lot of e-commerce stores don't return. Yeah. Obviously, there's like certain things you got to do, like say if you're wearing earring, it's sort of like hygiene, or underwear, you can't sort of return that and resell it. But yeah, I feel like that's been super important for us as well, understanding that.
It's the environment we're in. Like, you almost have to, it's almost expected that you have to have those things in, like Iconic does it and ASOS do it, like that free returns piece. But you have to also look at it. It is a cost of lifetime value. Like, it's just a cost of being in 2020 and having access to all these people and being able to ship products around Australia. Is people want free returns, so be it. Make sure your brand can like really live those experiences up. And some people are unreasonable sometimes, and sometimes you have to say, fuck, sorry, we like...
Yeah, that happens.
That happens.
We had a guy who had to bring back a bomber jacket after 2 years. And do you know what's funny? They always say the same number. They're like, I've only worn it 3 times. It's like, how old are you, 12? Like, they always say 3 times. Like, it's
crazy.
Say twice or once. Or like.
So as long as you, like, I think you have to be reasonable in there, but it's definitely, that's important to make sure customers are coming back again and again. And we're playing long game. Like, I know you guys are too. Everything we do should be about what does this look like over 20 years with the lifetime value of a customer, not over one transaction.
Important people, important. Working capital?
Oh, before we go there, let's go acquisition cost of a customer.
Okay, let's go.
So that's
something we're just learning now, isn't it?
Still in marketing. So the last thing we're again, there's plenty of other important numbers around marketing, but these are just the ones we're talking about ICE at the moment, and we'll get deeper as we learn things.
ROAS.
So this one's acquisition cost of customers. So, or cost of acquisition of a customer. They call it CAC. CAC. So what it is ICE is spending, and I'm making up numbers. Say he spends 50 grand on Facebook ads for the month. Again, made up number. And that 50 grand means that he gets 50 new customers. The acquisition cost per customer is $1,000. Yeah. And then ICE has to look at that and go, all right, what's the lifetime value of that customer? Is that something wrong with my marketing? Is my marketing working? How do we bring that cost of acquisition down per customer? And we should always be in a battle to bring that cost of acquisition down. But I guess as a starting point for any business, it's let's first understand what that cost of acquisition per customer is, and then we can start talking about, does it make sense? How do we bring it down? But, don't fly blind, just actually understand those numbers.
Yeah, that's really important. And that's just, to be honest, that's just something we've sort of learned probably over the last 3-4 months, to be honest. Like, it's not a metric that I used to measure, but I always understood lifetime value of a customer. Like, if you think about, like, you go to a cafe and you have a great experience, you're always going to go back to that cafe. And, like, someone recognizing your name at a cafe is, like, that's important to me, you know what I mean? So that's, like, lifetime value of a customer. But just the acquisition side of it, especially in e-commerce, is really important, is it? Because we spend a lot of money on Facebook ads and stuff like that. So, great couple points on marketing metrics. Let's move into working capital and something we struggle with.
Yeah. So this is like we're talking about an inventory business here, like being YKTR or the book business. It's all about the book business. I'm going to keep saying I'm making up numbers. I'm making up numbers still. Let's say it cost us $10 to make a book that we sell. Yeah. What happens is we order our first 1,000 books, say. It costs us 10 grand. And then as we were touching on before, we sell those 1,000 books and we make like 100 grand. We lose 50 grand to our direct costs. We lose another 30 grand to our overheads, our rent, our staff. We're left with $20,000. As you said, we have to pay our tax of 6 grand. We're left with 14 grand. Yeah. And it cost us 10 grand for that first order. Then we turn around and go, fuck, this business is going to kill it. We want to go order 10,000 books. It's going to cost you 100 grand. It's like, or even if you go 3,000 books and it's going to cost you 30 grand.
Yeah, 84K somewhere.
3,000 books is going to cost us 30 grand. We've only got 14 grand and our original 10 grand. We've got 24 grand and we need 30 grand because we're trying to grow our business. And in doing so, we're always trying to increase that inventory. Or you're going to release a second book, which is going to double your inventory because you're releasing 2 books now. You need to order there's minimum order quantities. I need to order 1,000 of each. As we're trying to grow our brand, what's happening is, and your brand and most inventory brands, the cost of inventory continues to increase, but people aren't properly planning that cash flow to go, all right, how much can I actually afford to spend on inventory? They just fucking put orders in. That's
what we done last year. Like, we went into winter. We're like, because we're always increasing the sales and we're selling out on the first day, I just made up a number in my fucking head. I go, let's just make this amount. And we loaded it up and we spent so much money on thing, but they didn't sell as well as what we thought it was. We kind of changed design. There's a lot of different factors. I don't think we marketed it as well as we should. And we got left with a bunch of inventory on hand. When it come time to release a new collection, we're like, fuck, where's the money?
Yeah. And you got and instead of cash, you've got all these t-shirts, and then you end up running a fucking sale going, all right, cool, we need to get that to cash, but you don't take into account the fulfillment costs and everything else. Yeah. And you basically,
it was a fucking nightmare. That's what it was. And it can go the other way around. They say if you underorder and they sell out straight away, that
hurts just as bad. Yeah, it hurts just as bad.
If not more.
There's getting that happy medium between what's the right.
How do you figure that out?
It's hard, man. And there's a lot of trial and error. And you know this. You do one fucking t-shirt that doesn't fucking move, and the next one you sell out in 5 seconds. Like, you've done your kids ones and sold out in seconds. Like, you just don't know sometimes. But so as you get bigger and you get experience, we're trying to do like a wholesale channel to deal with that. I know that you're probably against that a little bit, but in Jess's world, we're going, you know what, we need some consistency of income to deal with minimum order quantities. So to know that we're selling, and making up numbers, sell 500 shirts on day one through a wholesale channel will mean that we can get a minimum order quantity down to bring the price down and hold some stock.
That makes sense, eh?
Yeah. So that's how we're trying to deal with.
Is there a Shopify
back end
of it?
Yeah,
there is, eh? Yeah.
There definitely is. I don't know. I try and, like, if you think about wholesale, they're a bit more of a high maintenance customer. Like, they want to, you want to contact
payment terms and all that exactly. Fucking shit, eh?
It's annoying, but I'd rather have the relationship. So I'd rather them ring up and talk to them and take the order than just tell them to go online and through a website. But you're right. Then we go into a payment terms issue. So instead of having money held up and locked away in stock, you're going to have money locked away in accounts receivable. Like, we're owed this money from 100 customers. So there's different challenges in that. It's just, picking your battle where you think you can make cash, which is what working capital is. Like, after we make all that profit and loss, our working capital is how much cash do we have left to actually reinvest, or where is our cash gone that we would otherwise reinvest back in the business or would be in our bank account.
How does the business scale when in that scenario?
It's really difficult. So most of the time they're scaling either through investors or finance, like a lot of businesses are. Otherwise, you've got to scale responsibly, like
bootstrapping.
A bit bootstrapping, a bit slower. Like you're not trying to fucking take over the world day one. You just understand that it's a longer journey.
Is there a right way to do it?
I think everyone's got a different preference. I think what will dictate it is where you think the ceiling is. So if you're in a call it a fucking tech space where you've got Airbnb or Uber, you need investors to actually to win the market.
Sense,
you need investors to win the market. But if you're in a clothing brand where you go, you know what, our end result is, and again, I'm making up numbers, our end result's $10 million turnover, and we can get there if we just put this clear plan in place and slowly increase over the next 5 years versus giving away half our business today to get people on board.
A lot of people are scared to give up equity in their business, eh? Do you find that?
Yeah, and I think they should be. Like, ideally, you wouldn't, unless you actually have a plan and need that cash, I'd avoid giving up equity for as long as I could. Again, it does make sense. Sometimes we were speaking about someone before and we're going, big piece, small pie, or small piece, big pie. And every case you got to take on its merits. But would you give away a bit of YKTR now for 50 grand?
No in the world.
And I'm making up a valuation, but there will be a number where you'd be like, if someone walked into,
there's always a price.
There's a price where you're like, take it. I'll have a holiday.
Yeah, you can set yourself up and your family up.
Correct.
Why wouldn't you?
There's going to be a price that makes sense, but a lot of the time with these investments in the early stage, like you're not going to see any of that cash. So the investor comes on board to put money in, not for you to go and buy a house, to go back in the business to buy inventory. Like you're not going to see the return. You're just diluting your share in the business.
Yeah, it's true, isn't it?
So there's a point where you need it and it makes sense and you think your business is going to be worth a lot more on the back of that investor. There's a point where it's, you know what, we'll just ride it solo and take our time and build it over time.
Do you know what I've learned by being in business and running it? The importance of having a personal brand off the back of it. Because once you get to start dealing with numbers, you're like, shit, where the fuck's all that money going? But like the reason why I've done what I've done and started a podcast and eventually did that online course, fucking get around to it, it's because you build a personal brand. And like say I build a digital product, you get that 100% of, obviously it's going to be cost and stuff like that.
90%.
90% of it all comes through. So like people will want to start clothing brands and like cash. I was like, I don't know, man. Like
it's cash expensive, man, and you don't see money for a long time. Like you said, the boys haven't taken any money out of YKTR yet. So there is a long-term investment. I definitely agree with the personal brand piece. More that 95% of businesses fail, like we said before. So having YKTR is still in the journey. We don't know where that ends, but we know that ICE will always have something on the back of that, whatever that may. Like you're already doing consulting gigs for people, you're doing the podcast, you're doing that kind of stuff where I'm sure that someone would snap, like I'd grab you and say, hey, fuck, come help us run this business if you... Like there's always going to be something. Not that you come work.
Do you know what's funny? Probably a year and a half ago, someone offered me and go, I'll give you $100K if you can come do stuff for me. And like at the time of YKT, I think I was getting paid like $35,000 a year. So and I saw the $100K, but I just saw it like if someone's like headhunting me at that sort of point, I was like, shit, I must be on the right track here.
Yeah, and it makes sense. Like, fuck, it'd probably be $200K today. Like, you don't know what that number is.
Exciting. So reporting, that's sort of last topic we can touch on here.
Yeah, so one of the things that, again, most people just do is they go to work. Like we get really busy as we kind of were talking about before. Like we come in, we just got a to-do list that's to the bottom of the page and you just punch out shit. We never stop and look at what's actually happening with the business. So what we've put in our businesses and what we'll work with you guys on is weekly, monthly, quarterly and annual kind of KPIs. Reporting and flow structure. Yeah. So we do our weekly KPIs and we have a weekly meeting. We do our weekly Monday morning. It was meant to be 8 a.m., but I came here instead.
Thanks, man.
Weekly 8 a.m. meeting. It's normally non-negotiable, so we don't move it for too much. And everyone knows that they have to be at that meeting 8 a.m. Like,
how long does the meeting go for?
Hour, 90 minutes. Like
so it's quite a long one.
It's a bigger one of the meetings we have, but it's more like talk about people, customer issues, like all the key parts of the business, any things that we want to get out of the week.
Yep.
And part of that meeting...
Ready for these Monday meetings, bro?
Part of the meeting is just weekly KPIs. So what are the 4 or 5...
What's the common 4 or 5 KPIs for a business?
Every business, every industry, every business different. But let's talk
e-com.
Yeah, for sales. So firstly, what's the sales from last week? What's our marketing spend from last week? What's our number of listeners on our podcast from last week? Like just these key things that you guys think you can control a little bit and you care about. so that we can make some quick business decisions for the current week. Like, oh, fuck, our podcast listeners are down. Let's try X or let's do Y.
So like a great way to sort of measure that is to say we made like $1,000 this week, for example, but we only posted out 20 pieces of content, where the next week we posted out 60 pieces of content and we made 10,000. Like that's a metric that you could track easily.
So number pieces of content now becomes a KPI. Like, let's track that. And it's fluid. Like,
we do that, but it's not to that. We don't measure it, eh?
But we've discussed doing it. We've discussed making it more of a KPI.
Yeah.
Because that's my background. That's where it comes from. It's like, you got to have an end goal for doing something. Otherwise, what are you
what's
doing
the
it
point,
for?
yeah? And like, you just can't make decisions. If we don't have any numbers to drive, if you don't know how much a piece of content translates to sales, fucking post no content or post 500. Like, it doesn't matter until you can measure something to make actual decisions. And you'll get to a point where it's like, all right, cool, we've done it for 3 months and now we know the impact. We don't need to measure that anymore. We know we need to do 60 because 80 is too much and people get disengaged and 20 is not enough. And you just roll with that until you think you need to change it. Point is, find the couple things that matter and measure those. Like, the accounting firm that we run is more like, we run a thing called WIP, like the hours that we measure the time that people put into timesheets, or we measure jobs out the door, those kind of things, like just quick high level numbers that we can run out of a reporting system. It takes us 15 minutes to get the numbers together. Let's talk about those. And like new customer sign-ups, that kind of thing.
Do you reckon you have to be a numbers guy to love numbers, or you can learn to love numbers?
I think you learn to love, so don't
growth.
look at it like numbers. Yeah, well, you learn to love growth. But if you look at it like, pieces of content, like it's a number, but it's more about, you can have that conversation a lot easier than you'll talk about, gross profit with me.
Yep.
If that makes sense. So find the numbers that matter that you can engage with. And again, like, you don't have to do it. Get someone else responsible for that number. You just have to talk about it in the meeting. Yeah. If that makes sense.
I feel like that's where, like, I love looking at numbers, but I don't like doing the numbers, but I love looking at the end of the week and go, oh shit, we're going alright here, or fuck, we're terrible.
So, and then that's the thing. Like, once the KPIs are known, like, and you say, hey, these are the 4 things that we're managing on a weekly basis, you don't have to think about it except for that once a week. Like, what happens most people get distracted, like shiny object syndrome. So every time an idea pops up or something pops up, we just run to that idea.
You're talking to me here.
It's bad, but that's every business owner. So what the point of the meeting structure on a weekly basis is, anything that comes up is like, fuck, put on the list for Monday. We'll talk about it on Monday. We're not changing our plan.
Flow.
Yeah, we're not ruining that flow for the week. And it just gives that, and same with the numbers, like anything that comes up that you think, fucking, well, all right, cool, let's talk about that on Monday in relation to content. Like, that's our time for that. Just go to work kind of thing for the week. So we do that weekly. Monthly, we have a very similar conversation, except we go a bit deeper into KPIs, like our actual profit and loss performance and what that reporting looks like around gross profit, and making sure we're getting the right data, because you've been going for 3 years, you've only had the right data for 4 months.
And it's made a massive difference, hasn't it?
We added 20% to our gross profit in 4 months just because we had data. So getting that data right, and it takes time. Like, getting a clean P&L has taken us ages for you guys just to get that data, the input of data correctly. And you've had nothing to do with it. So it's been, the guys in the office and the guys in your office talking. So get the distraction out of the way, being eyes, and get the data clean, and so that we can get to a point where it's like, hey, here's the clean reporting. Here's how much money you're making. Fuck, let's make some decisions on this. So we do that monthly. We have a very similar meeting flow to the weekly one, just a bit more detailed into numbers, into actual profit.
You got food at these meetings, or coffees, or what?
We have coffees.
Surely Sheldon Brecky.
Mate, anyone can grab whatever they fucking want, as long as we're there at 8. Yeah. Then quarterly we do exact same meeting flow, except we do it over like a weekend.
Away,
weekend away, maybe 1-2 days. And it's, we go somewhere out of the office and we get like high level quarterly performance, all the same topics, just on a bit more of a detailed basis across the quarter. But then we also set our next quarter's main priorities and our next quarter's reward if we hit our targets. So
there's a reward system in the back of it?
Yeah, all in the reward system in the back.
What have you found to be the best reward system? Is it financial? Is it gifts? Is it what?
We do experience. So we try and do something.
Like skydiving, give them
more team experience. So like this quarter, actually, we've done a big focus around like mental health for the team, like gratitude and mental health. So some of the KPIs are...
Oh, that's cool.
Yeah, we'll just, we work in accounting's a high stress environment. There's always a deadline. There's always pressure from clients and that kind of stuff. So we realize how hard the guys are working, and we're like, all right, how do we make them how do we acknowledge that we actually care about the mental side of things as well as the work side of things? So it's things like nominate each person has to nominate at least 2 other people during the week for things that they've helped them with or done well for them and that kind of stuff. Like we've got
Is that good or does it feel corny or
No,
what?
it starts corny. I actually got it from I done Kokoda Trail last year.
How was that?
Unbelievable, really tough.
Yeah.
But one of the guys that I did it with, his name's Benny. He's blind. He woke up 16 and just one day couldn't see.
What the fuck?
Yeah, genetics.
Fuck, that's sad, man.
Like really sad, but he's so inspirational, man. Like really hasn't let it slow him down. So he done it. I went with it. Like it was a raising money exercise for him, charity exercise for him. At the end of every day, as part of that, he had a thing where we sit around the dinner table, and you have to nominate. Like you have to share your experience of the day because they're tough days. And then nominate someone who you thought was like helped you get through that day, kind of thing. So
who you nominated in the office, Lukey? Just had to pump each other up.
just back and forth.
You're awesome today, bro.
But and it's hard to build culture when you're only 2 people.
Yeah, fucking
we're 17 now in the office, so it's so much easier. Like we've got the opposite problem where you forget to pat people on the back because there's so much things happening.
That's a footy side, eh? 17.
Yeah, it is. It is. So we do. It does feel corny at the start, and people are a bit anxious. But now it's good. We've been doing it for probably 6 months now, and people are a lot more just, oh yeah, fucking. They're taking notice of what people are doing.
I done something ages ago about motivation and like the financial reward. It tapers off after a while. So like,
yeah, it does.
Boom, just like sort of. But the best sort of praise you can give someone is public like appreciation as well. So
agree.
Yeah,
agree. And you're 100% right. No matter what you give people, whether it's material, like anything material, it's taken for granted almost after a little bit, which
material things can be a better than a financial reward if it's tailored towards the individual. Yeah, so say if you love Manly Seagulls and I got you box tickets, you'd appreciate that more than say $1,000 bonus. So
and I think material works better when it's there's no reason for it. Like
here's a sandwich press.
Yeah, I walked past it. No, but like you haven't actually gone and said. Like the other day, one of the girls in our office was like she was saying she's a bit tired and stressed, and I just like went across the road and booked her a massage, and she said, "Oh yeah, by the way, I booked your massage." Like there's no reason for it. It wasn't that easy. Like, it took a bit fucking longer than I had to fucking organise it. But point is, it's not tied to anything. It's just, hey, I appreciate you, and like, if you're hurting, I'm hurting, kind of thing. Mentality.
A little bit off topic. You talk about being a boss and having people underneath you. And you're a little bit different in services. Time versus value. We talk about this a little bit off air and stuff.
It's very, especially in 2020, where my team, I'm getting emails whether it's 5 a.m. or 8 at night. Like they're always on to a degree. So we trust our guys a lot, and I think a huge thing is trust. The issue we have in professional services is the customer expects us to be there between 9 and 5.
Okay.
So that's where we struggle. Where we give the guys flexibility is around where they like if they want to work from home, we let them work from home. Like we got no issues with trust. If they, if they're sick or whatever, like obviously they just do what they got to do. What we actually last week we did actually send an email around on it. So the issue we're having isn't trust; it's more, as we're growing, keeping on top of where people are. So someone will ring and like, hey, I need to speak to X person. Like, oh, let me see where they are today, kind of thing. So we were losing track. So we have sent an email to the guy saying, hey, we love you, we trust you, we don't want to change anything that we're doing, but we definitely need more structure around it because we're just losing touch of where people are as we're growing.
Okay.
So it is a balance. Like it was a lot easier with 4 people to go, yeah, cool, we know.
Yeah, she's at Warringah Mall.
Shopping.
She's down in Girdlers. Working from the beach.
So it's a challenge, but it's having great people in your business. You always said to me you don't want to employ anyone. How much better is it having Lukey here?
I never said that, did I?
Fucking 5 years ago.
Nah, I think you sort of get to the point where like you just want to control everything at the start. Like you almost micromanage yourself in your business. And we sort of talked about this with Vic last week. Once you get staff and they're the right staff, that's the fucking key, isn't
right
it?
Staff is everything.
Yeah, so I've got 2 staff members that work underneath me now, and it's fucking been great, isn't it?
Yeah, and people are quick to blame the staff members. So, the right staff comment. A lot of the time, we're inexperienced as business owners in how to manage. Like you've gone from managing no one to 2 people. It's a big increase on 0, and no one's ever taught you how to manage people.
Always sort of, because I've come from a sports background, and I go back to the coaches that I loved. So that's how I do it.
I'm the same.
Yeah.
I say to the guys all the time, I just want like a high performance Melbourne's born football team with that kind of attitude.
Without the Bellamy fucking shouting at you. All right, we just sort of is that all on reporting? You want to? Can you think of anything else?
So the only thing I was going to say, so we do quarterly meetings like we're touching on where we do goals for the quarter and a lot of detail there. Then we do annual, again, weekend away where we talk about.
Do you have goals before the year starts on how much
Revenue?
Revenue?
Yeah, we do. We do have revenue as a target, but it's a bit slower with accounting world, and even like in your game, like revenue's hard to control. Revenue's more an output of a lot of inputs.
Okay.
So we try and focus on the activities. So being like prospecting
process
meetings.
oriented.
So focus on the things you can control, and revenue is generally the output of that. We have revenue as a goal, but it's not like I can't make revenue appear without doing something.
Very, very reminds me of sports when they say the scoreboard looks after itself.
Yeah, exactly that.
That's exactly that. All right, Rich, I got a couple random questions, but I haven't done my tax return in 3 to 4 years. Am I in trouble?
Nah, so I'd just say get it sorted. The ATO, we haven't even touched on compliance here, basically. But
these are all compliance questions.
Yeah, it's fine. And this is the issue. Most people, they go accounting, hey, let's talk about tax and stuff. We speak zero about tax with you once a year. We do a lot more out of there. But ATO in trouble, no, just ring someone and get it sorted. It's they're not going to chase you over your money. They probably owe you money more than you owe them money a lot of the time if you're working for someone.
Oh,
so
really? Yeah.
if you've been in a job, you're probably going to get some little refunds along the way. But regardless, just
Speaking of, I need to do mine.
get it sorted.
Best way to stay on top of your bass?
Just use Xero. So get accounting software. Xero is what we use for 99% of our clients, especially when they're smaller. Connects your direct bank feed, get someone to reconcile for you, and it's super simple. It's just being in the rhythm.
What's the difference between having a good accountant and not having one?
Not one in having one at all? Or
I think so.
No, so good or bad. So generally, most accountants, wherever you go to, are going to be able to do your compliance side of things. Like, hey, here's your BAS, here's your tax return. Not every accountant is going to be across your business and actually care about your business. The thing I push with our guys is more about caring about the people. Like, we never want to be in a world where people think we're just doing things for the sake of doing things. It's all about, hey, how do we help people achieve their goals? The thing people struggle with accountants is they have to generally pay for it. So, having a good accountant generally costs you money, but you generally end up in a lot better position. And I'll give you a high level example. Like, we got a new client the other day. We're probably charging him, he's paying us, and I'm making up, like not making up, but I'm kind of rounding around numbers here. I think he's paying us around 50 grand a year, which is a big amount of money. He was paying his other accountant probably 30 grand a year, so it's a bit of an increase. It's a lot of an increase. We've just gone through some strategy in that around year end, and we've put in plan a place around his super and investment property and stuff like that, like very specific stuff. But it will save him about 800 grand over the next 10 years. So
shit, you're copping that, aren't you?
Yeah, well, that's it. And it's like, fuck, well, then that's on day one, year one. So we'll generally have those little wins along the way. We can do a lot more, and we have a good accountant will have a lot better resources.
I feel like a good accountant in the right area of where your business lies is super important as well. That's the reason I changed over to you, because my old accountant, he goes, you're spending too much money on marketing. So he was only looking at the bottom line. I was like, and then you told me what you were spending on marketing. I was like, shit, this is my guy. So the way I can explain it from someone that's had multiple accountants, it's like a fucking weight off your shoulders. When you go work out and then afterwards you feel good, that's what it's like. Like, you don't necessarily want to go do the workout. You don't necessarily want to go have the meeting with the accountant, but afterwards, like, it's like
peace of mind.
Peace of mind. That's the difference between having a good accountant and a bad one. Last question, and a little bit of best investing advice for the average Joe. And this is quite
so investment, like where to put your money, kind of.
Yeah.
Fuck, go read Barefoot Investor. Like
what's that? Is that a 60-20-20 split?
I can't even remember, but I remember reading it, going, you know what, this is really good practical stuff for an everyday person. And reality is, like, people don't generally have an issue with investing; they have an issue with spending. So if I can give you advice, is actually invest in something. Go get an index fund, which is just like an average share of the market. Again, it's in Barefoot Investor.
That's what I do.
Yeah, and that's something, but focus on, all right, I got $1,000 a week that I'm earning. I only really need to spend $400 a week. I'm putting that other $600 every week and start with putting that $600 away every week. Like, I think that's more important than where do I put it? Get in the habit of actually investing.
Do you reckon you automate that with
100%?
Always.
And like I said, everyone has a spending problem. We spend every cent that we can. So if you can fix the spending side of things, the investing you'll look after over time.
No one cares what you got,
mate. No, and if they do care, you shouldn't care about them.
Yeah, I think that too.
Yeah.
Just want to thank you for jumping on. Hope you guys all learned something. Where can people find you for services? What services do you provide? All that sort of stuff.
All right, so we do everything compliance related. We do most things in the life cycle of the business, whether it's buying, running, selling a business, and then everything in between. We like to be that middle ground of everything for people's finance world. So if you do have to get a loan or you do need to invest, like we've generally got people around us that can help people do those things. In terms of where they find us, so hit us up. I think mobile is probably easiest. Just send us a text or give us a call on 0406 181 946.
Say it again.
0406 181 946.
Like a fucking radio ad, that, isn't it?
Pizza Hut delivery.
Thanks for your time. I appreciate it as always, and looking forward to Toddy's dinner in a couple of weeks.
Mate.
Be exciting.
You've been raving about it.
Yeah, it's a goodie. All right, bro. See you later.
Cheers, bro.